What's up, Operators Podcast Network? Welcome to episode infinity. We have Alex Beller from Postscript talking about AI, Postscript history. At the very end, we have some exciting news about e-commerce law and lobbying groups and all that type of stuff. We talk about headcounts. We talk about stand-up. The first 40 minutes are me interviewing Alex just about the history of the company. I was hell interested by it. I didn't know they went to Y Combinator. They're very smart. They're very tactful. I think the SMS space is interesting. He's a friend. He's a sponsor of the pod. And even if you hate sponsored episodes, this is very much worth a listen. I think it's fantastic. Anyway, welcome to the pod. Thanks for being here. Fulfill ad. Let's go. The big pink elephant in the room is the economic climate. No one knows what's happening. We're heading into a tough period for e-commerce brands. Mike shared this on LinkedIn recently. Brands are looking inward and figuring out how to save money while improving their operations and making them more efficient. If you want to cut spending and drive efficiency, use Fulfill. You don't need 5 different tools. So if you're looking to consolidate SaaS, it's a proven, awesome service for your operations. You can use Fulfill. If you're looking to use more AI in operations and accounting, you can use Fulfill. If your EIP is crippling your business, use Fulfill. What is most crucial for every brand out there is to cut costs. I talk about it many times. NetSuite's overpriced. It costs too much to maintain, and they will screw you on a renewal. If you're using NetSuite, you should absolutely move to Fulfill. I didn't even look at NetSuite. I've been on Fulfill for 5 years. It is more efficient when it comes to order management, warehouse management. We do resource planning in there. We do our accounting in there now. They helped us set up a warehouse, a factory, everything else. So thank you, Fulfill. It's been a great partner. Thank you for sponsoring the podcast. And saving money is now even more important than it's ever been. You should look at Fulfill. They can hopefully save you money. Goodbye.
All right, welcome to the Operators Podcast. We've got a great episode for you today. It is brought to you, as always, by our great sponsors, Fulfill, Northbeam, Postscript, Rich Panel, and Saris. Let's get after it.
So yeah, last week I slept through the episode, but the night before, these people did not understand about the time change. Like, it was like watching 5 adult men be like, well, the calendar invite's not at the right time. And then being like, what's the right time for me?
Dude, that was not me. That was Beckham. That was Beckham. And I'm the grandpa. Sorry. Delete the F-bomb. I'm the grandpa, but that was not me.
But I went to bed being like, I can't believe I'm doing a podcast with guys who can't figure out the time change. Then I slept right through it. It was karma punching me in the face. Because for people who don't know, Europe happens 3 weeks later. So like there's a 3-week period where America and Europe have a different time difference. And it's fucked up a lot of meetings at work. But yeah, so I knew about that going into it.
Yeah, I had a call with Australia that I thought was at 5 p.m. yesterday, and I'm like getting messages at 4:08 Pacific time, like, we're on the call, bro. And I'm like, oh shoot, I knew this was gonna happen.
Yeah, that's one reason to actually get rid of it. I like daylight savings time, but yeah, it's stupid that it's all different times. But anyway, Alex, what are your thoughts on daylight savings time?
Not a fan. Not a fan personally. Not a fan personally. Don't need it. Would prefer us. I like mountain time. That was my favorite. I've lived in all of them. Mountain's my preferred. That's
I
what I
lived in
got.
Arizona, and they don't change the time there. I think, at least it's back in the day. Is that the same? Is that
It is.
that mountain
It's
time?
actually that's where I'm from, and they just don't change clocks there. And when you grow up there, it makes you feel like the rest of the world is crazy. You're like, why is everyone doing this? You just keep the same.
Well, dude, it's the land of endless sun. But nice, man. We got a lot to talk about. People don't know this. Me and Alex are tight friends. So I'm a big Postscript supporter outside of them sponsoring the podcast. I love those guys. I think they're doing great work. Dude, Alex is a wicked bowler. So me and him and Ben from True Classics went bowling. The guy bowled like a 290, but then I found out that it was just Ben was just changing.
What does
the
that not
score.
surprise me? It's
Yeah.
like a deep fact about Alex Beller. I want to tell you a story. I want to tell you about my impression of Alex Beller real quick. So, I met Alex years ago, and we eventually did switch to Postscript, and we've been on Postscript for a while now. But there was a time where we were on one of those dumb competitors. I actually don't even remember their name right now because I can't remember anything anymore. But
How
I guess they're still
attentive
around.
of you.
They were one of the big names in the space who you don't hear about that much. That's a testament to like the job that Postscript has done. But Alex would reach out to me. Alex was like did the perfect job of selling me over time. And this is long before. And we talk about how SaaS salespeople and how salespeople in general, are always coming at us, right? Like, I am so inundated, I want to strangle myself. And I'm sure Sean is the same. And it's like, I love Twitter so much. And the real reason why I hate Twitter is because every time I see my messages and I go look at it because my DMs are open, I just have so much of like, what up, bro? Like, it's just like the biggest nonsense. And now I'm getting that by text. But Beller, like, he would just keep in touch, and he's doing a cool event, invite me to this thing. He actually did an event and he wanted to have a culinary aspect. And he's like, hey, can you help me? And I know a lot of chefs and a chef that I love, Jasper. I hooked him up with Jasper and Jasper crushed it. It was a great event. I think you've used them again. Yeah,
we've used him a handful of times.
Yeah.
I've personally just become a huge fan of Jasper.
Yeah, Jasper's awesome. But Jasper did our event too, Sean, the operators event that we did back at the HexCloud studio a while back. So Jasper crushes. He's like my go-to guy when we just have to do something. We'll just send him on a plane and he'll just go crush it. But anyway, Alex like kept in touch with me, but he didn't bug me. He didn't bug me. Like months would go by and I wouldn't hear from him. And he would just sort of like, just check in. You want to do this, you want to do that. And, I was never going to make my team switch. But whenever it came time, I just reminded people to look at it. And so I just want to say, like, that is the way to sell. So anyone here that's trying to sell something to a brand should really understand how Alex did that. Like, Alex should write a tweet about how he sold to HexCloud, seriously. And people should pay for it. You should be like undersubscribe. That is how to do it. So Alex, I really respect you for that.
Nice.
And I wanted to put that out there. So kudos to you.
Thanks, Jason. I appreciate it. The funny thing is, it's actually something we talk about, not specifically the HexCloud sale, but me and my two partners, we talk about right now Postscript's just about 300 people, a little less. And so, the sales team exists, but the three of us talk a lot about how much founder-led sales, how much it actually does scale as the company grows. Like, it's something that we actually do try to stay like super, super, super involved with and like leading from the front, just because we found that like Postscript is a better company the closer the three of us are to our customers.
Well,
like,
Alex,
just through and through.
That's very Alex Karp of you, the CEO of Palantir, right? His whole thing is that if you're selling $100 million contract, like, people, dude, they won't talk to the sales team. They will only talk to the CEO. They'll only talk to the founder. And
totally.
Do you find that true? That like deals only close when you get involved?
Not to that extreme, but we find that it helps. We find that it helps with opening up new conversations, because people want to come to me all the time for like advice on their SMS program, right? Like, just like founders will like hear me on something, they'll want that. It'll help with the actual closing, and it'll help with retention too. Like, I stay involved with tons of accounts, like post them signing up with us, and I try to be available, right? Like, Don, if you have a thing, you'll hit me up and I'll action it. Or like, Jason, I was on HexCloud's annual review call a month or two ago, and like, now we've got like 15,000 customers. So like, there's a huge volume, but like, the more that we stay involved, just the better things go over time. It's like, it's unsexy. It's like, I think a lot of founders want to like end up in the ivory tower where they're like looking at the control panel but like not getting their hands dirty with anything. But actually, like, you guys talk about it in terms of your negotiations or like hiring work, right? Like, continuing to get your hands dirty on like the really important IC work. A lot of value can come from that, a ton.
Yeah, dude, you should know the business you're selling. But look, I think there's like 4 things we should talk about today. Okay.
Let's do it.
The first one being, I'm gonna try to list these out so that like we could come back to them and reference them. Postscript being such a big business, 15,000 customers, 300 people. I'm sure $1 billion company at this point. Like that's pretty sick. So let's just like hear about that. Number 2, the future of SMS, right? Like where does this actually go? What are you guys thinking and working on? Number 3, why did the incumbents drop the ball so hard? Right? Like this is just for my own curiosity. Not trying to talk shit on Klaviyo, but like they should have had the whole market, right? They had 100% of the email market. How come they didn't have 100% of the SMS market? They're the 4th biggest player now, right? Like they really dropped the ball on that. I'm just curious why. And then number 4, all the legal work you're doing. I just had to settle something for 5 figures for sending someone a text message at the wrong time. And nobody cares. Nobody's trying to like, solve that issue except for Postscript and Alex Beller personally.
Quick break from the pod. We are talking Northbeam and their new release of Clicks and Views Enhanced. If you're like us and you use Northbeam as your source of truth, amazing. If you don't, you should check them out. But if you are on the platform, they are now putting out a views enhanced model for attribution. I think this is a pretty big shift in the platform. I'm pretty excited for it. If you have run anything that is very impression or view based, so like TikTok, YouTube, television, these platforms have been notoriously difficult to track in Northbeam and anywhere else. It drives companies like ours nuts. I'm very stoked for this release from Northbeam. They are now taking like click data, which is your source of truth, and they are layering on impression data and doing whatever black magic Northbeam does to give you a better view into the performance of your ads. I love this. I can't wait to check it out. I think everybody else should too.
Number 1, dude.
Let's do it.
How's it run such a big business?
It's fun. It's super fun. We're a slightly different flavor of 9 operator, but it's really fun. Like Sean, I came from Stat Commerce, which is a company you probably know, like west side of LA e-commerce. And so I was on the brand side, but we saw the opportunity happening. Like me and my 2 partners, Adam and Colin, we saw mobile traffic up and we saw email engagement plateauing. And we were like, okay, something's going to happen around like mobile messaging or text messaging. And we launched a business thinking it was going to be a small passive side project. We had no idea how big the like Shopify ecosystem was. And we were like, we're going to launch on the App Store. We're each going to make like $3,000 a month. If this is successful, it's totally passive income, that whole concept. And we launched it. This is now 7 years ago, and just immediately saw a huge demand. Immediately, like brands were looking for a way to text their customers. They came in, they signed up without talking to us. We applied to Y Combinator, we got in, and that was just like off to the races. And
I didn't realize you guys are a Y Combinator company. Dude, yeah. What was that like? Did that suck or was that fun?
No, it was great. It was total bucket list. It was so much fun. We had no connections. We were just random dudes in LA and Phoenix. We like had no credibility. And so it probably like sped our growth up a lot. It certainly sped up our fundraising. We went to Y Combinator, and what you do is we did that in January of 2019. We moved to the Bay, and the 3 of us got a house together in Oakland. Me and Adam and Colin and Adam's dog and Adam's girlfriend at the time, Megan. And all we did was work. We sat around the kitchen table. We worked 7 days a week, just talking to customers, selling customers, building products, shipping code. And it was super scrappy early days. Like we'd be on the phone with a customer who'd want to implement with us, and they'd be like, hey, I want to use my own pop-up to send subscribers into your system. And we like had no API or anything like that then. And we'd be sitting there and we'd just be like, cool, here's our API like link. And it would just be Adam like live writing code to like stand up that API endpoint. And they'd be like, it's not working. And Adam would fix it on the phone. I'd be like, try again. Oh, great, it's working now. That must have been a weird like little bug. We were just totally pirate shipping. And what you do with YC is you go in every single week and you have a meeting with what's called your small group. And it's 3 YC partners, and we have some legendary partners and the same group of companies every single week. And you go around in a circle and everyone talks about how much they grew that week. And the partners just quiz you on what you got done. And it's intense and it's super competitive. And that just like raises your game, because you're sitting there, you're like, oh, I'm hot shit. And then the company next to you is like, oh, we grew 15% last week. And you're like, what? And then you go back and just work that much harder. So
who was in your small group? Anybody we would know?
There were some good companies. Like, not all of them have persisted. It's been a long time, but there were some companies who've done pretty well. There's a company called Gordian that was in our small group that's done well, selling like airline ancillaries. Not in my small group, but was in my batch, was Deal.
Right. Famously in the news for spying on people. So
of Twitter fame. And they were like a breakout company. But then, so you go through that, and then at the end, they prep you to fundraise. And this demo day happens where they bring in thousands of investors, and it turns into this really competitive dynamic because all the companies and all the investors are trying to like fund and raise at the exact same time. And it's just it's a huge advantage for the companies, because there's so much pressure for these investors that like, ooh, if I don't invest right now, the opportunity is going to close. Someone else is going to do it. And so just from the sake of like helping us get started, helping us move faster, and helping us fundraise, YC was awesome. We did 3 months in the Bay, then we left.
Okay, man, this is and this is like when Silicon Valley is probably still on TV, right? Or at least like it just went off the air. It probably was really, really fun. Now there's a rumor that like the demo day companies like are like the bad ones, and that all the good companies get funded first. Is that just people feeling salty, or did you get offers, pre-demo day?
We got offers pre-demo day. The investors are like stalking, and we were doing super well. We entered YC with like $20,000 a month in revenue, and we ended with like 1.2, 1.4 mil. And that was like 4 months later. We were just growing. You know who found us? Moise. Moise and his brother Sully were the second people to invest in us. They reached out to us cold, and they got on a call with us on a Saturday morning. We had one call with them, and then Saturday afternoon they called us back, and they were like, how much can we invest? And so they got into a super, super low valuation. And it's because they were looking for something like what we were doing. They were like looking for the Klaviyo of SMS, and they had to make a quick decision, but they got in before demo day. So we'd actually closed our round before demo day even happened, to your point, because like investors are trying to get in early if they can to avoid that competition.
Okay. So you do a demo day, but you're already funded. Do you let anybody else in? Or is it just performative? Like, I'll keep you around for the next series.
No, we let in some angel investors, people that we met a lot. We let in a bunch of like founders who, that's the best to have on your cap table. We let in like, Mathilde, the founder of Front, and we let in the founders of Podium, who become good friends and like mentors. So we let in some more people, but like 95% of the round was done.
Okay, cool. And this was so long ago. We're talking about 6 years ago at this point. What was the valuation of that round?
So it was a $15 million post-money valuation. So like we raised about 1.5 on 15.
Yeah. And the reason why that's so funny to bring up is because now pre-seed rounds try to raise $1.5 million on a $15 million valuation. There's just been so much inflation in this ecosystem. You were like the last good company to invest in, is what it sounds like.
I don't know about that, but I certainly think it was a deal, and we actually felt it was a deal. This is kind of a fun story where we got greedy. There was an investor that we were excited to work with, someone prominent, and
Jason Calacanis.
And it was not Jason C. But he said to us, he like had meetings with us and we were excited and he was like, cool, I'll invest 1.5 on 15. And we'd already raised a little bit of money and we felt the demand and we were like, we want 17. And she was like, I'm not going to do 17. And we were just like totally fucking off thinking we're hot shit. And, we're like, no, we have this demand. Like we're not coming down. And if you actually think about the dilution, it makes like no difference to the dilution.
Zero
like
difference. You know, this is something that as a banker, I always fought with people, and it's actually one of my panzerisms. It's I'm going to say it without the F-bomb. Take the damn money. You know, just take the damn money because it just doesn't make a difference. When you look at the actual numbers if you forget about the change in dilution, which is one way to look at it. Just look at the absolute like dollars at the end of the day, right? If you're raising money at 15 versus 17 and you're going to sell this thing at 200, the difference means it's like, it literally means nothing. And it's so much time wasted. People spend so much time talking about valuation. What Sean just said about valuations getting inflated now. It's like valuations are complete BS. Like none of it is real because it's all paper. There's no real. When a valuation is real is when someone has like real cash money to do a transaction, right? And so that's where your value. Oh well, we can't raise money because like people won't pay the valuation we want. Well, then your company's not worth that, right? Like there is a market clearing price for everything in the world.
For everything.
And that's it. Like the market is going to clear it. It's like trying to sell your house. I can't sell my house. People, well, you listed it too high. It's just like there's a market clearing price for everything, people. There's like simple basic economics in this process of doing transactions, but ultimately, like the level of greed and subjectiveness to all this, it's just so stupid. It's so stupid, right?
Jason, well said. There's definitely a price. You just might not like the price. But like there's always price. And yet my reflection on this example is that it was like totally like foolhardy ego. Like it made no difference. We were dumb. We didn't end up closing that money. And now we look back on that as like, that was everything worked out. And we ended up, we've raised more money at different rounds, but that was like, that was just greed.
But yours, but it worked. It worked out for you because you guys had a good business and it's become a great business. But like, there's a lot of people that passed on a deal that really would have been meaningful because of their inflated and distorted views of whatever valuation, etc. And you know what? They never got a deal. So you're the exception to the rule. We're the same. We've turned down stuff, right? Because like we've had really good offers over time, and we've just turned them down because we felt like we could do better. But I've always like wondered and thought in the back of my head, because there's something that I always say, like, time kills all deals, but the M&A landscape or the capital raising landscape is riddled with people. And because I saw this when I was a banker, who turned down a deal because the price was too low. And not only did they never do a deal at that price, they never did a deal at all because they were just greedy.
Yeah, I just want to say it goes both ways. That investor should have invested at 17, right? Like it ended up being 100x return. They should have just did it.
They should have, but that's not. But it's just it's way easier for them to pass, and because they might have missed on that investment. But they've got a fund. They're doing 10, 20 investments in that fund, and that's just like that's the game that they play.
Well, and dude, and Postscript could have been the fund returning investment. Like it
could have been.
It's so silly on both sides now for it to fall apart. That was, yeah. All right, but go ahead, Alex.
But also, I was gonna say, but also like having dumb stories like that is like the highlight of the journey. Like the three of us are like in it for the chuckles as much as anything else along the way.
Well, that's the best, actually. Like just like real life here, being able to laugh at work and not be so serious at the time. It actually allows me to like continue to do this job, because it's so punished. You're running a big business now, right? Sean is running a big business now. Hexclad is a beast. We're going to have our senior team meeting today. And my topic that I'm bringing to the meeting is about bottlenecks and communication, right? There's so much coming at us. It's like, I like feel like a failure every day because I'm not able to keep up with the communication. I just don't know how to do it. I throw my hands up, but it's such a beast now. And the fact that there's like Danny and I, like Danny's hysterical. So like when we're together, like the jokes, it's just, we just have the best time. And if I didn't have that, and if it was all serious all the time, I don't know if I could do it anymore. So the fact that you guys are able to like look back and laugh about things, I think everyone should really realize that, everybody needs to chill out and like stop being so sensitive and have a sense of humor. Life is much better.
It's the best.
Hell yeah, brother.
Most brands are leaving money on the table with SMS. Not Ridge. SMS is our number one revenue driver, and Postscript is the reason why. SMS is an email. If you treat it like email, you're doing it wrong. Postscript gets it. They help brands like ours turn SMS into high margin, high ROI machines. We stopped wasting sends. Okay. We would just randomly blast text to people. That was a bad move. Postscript dialed in our automations and subscriber LTV tracking. Then they brought us more subscribers, and more subscribers equals more cash. List growth isn't about getting numbers up. It's getting buyers in. Then they have AI powered SMS. Instant conversions. They call it infinity testing, one of the coolest names in all of SaaS. We use it every time we send an SMS out. Postscript auto optimizes for profit, and we're not getting fined. One SMS compliance mistake is a lawsuit. So Postscript is building for the modern industry to take into account all these ever-changing laws. The bottom line is brands are winning at SMS via Postscript. The results for 2024, Ridge had 1 million opt-ins, okay? We had 500,000 new subs, and we drove, I'm going to tell you guys, over $40 million in SMS revenue, and it's a 100% increase year over year. The ROI is insane, 100x plus ROI on SMS for Ridge. So if you want to try SMS like the pros, like Ridge, check out Postscript today. Thank you guys for being here.
Okay, so you leave demo day. You got $1 million. You guys move back to Arizona, I assume. Is that what you do?
We split up. I go to LA, Adam goes to Denver, Colin goes to Arizona.
Okay. So yeah, the 3 e-commerce hotspots known for their large scenes, Denver and Arizona. And then you just start selling, COVID happens, and then it just gets even more explosive. Is that what it looks like?
Yeah. It's funny how consistent the last 7 years has been. It's been the same story the whole time. Building product, talking and selling to customers, and just competing. The whole time has been competing with people who have way more money and resources than us. It was our first week in Y Combinator when Klaviyo announced that they were going to do SMS. And at the time that was like incredibly scary. And, then Attentive came around and as you know, was giving everybody under the sun free AirPods. And we didn't have the money to do stuff like that. And so all 7 years has been really consistent. Like the scale's gotten bigger, but it's just been, how do we innovate? How do we differentiate? How do we like try to be really good partners to customers? And like, how do we just sell more? And it's just been, the grind has been consistent. The scale's gotten bigger, but it's just been 7 years of like absolute grind on those things.
So Klaviyo comes out in 2019. They're like, we're going to do SMS. I don't think they actually launched that product till 2021. I mean, that's
no, you're right.
Like it was a massive delay. So look, that's the question. Why are they asleep at the wheel? Like why did this opportunity present itself? It was just because like you guys were operating, you got lucky, you saw people were like, you thought about mobile first, right? Or what happened? Why is everybody behind Postscript when it comes to this?
I think it's just a story of focus. Like, it's not like Klaviyo during this time has been atrophying, right? They've been building an enormous email business. And like you were there, I'm sure, when MailChimp, turned its back on the ecosystem. That was apparently like just an enormous growth year for Klaviyo. And they were probably focused on it. And along the way, they've probably been focused on other things. And so I think that like, I know Andrew a bit and I like him. And I think Klaviyo's like built good products. And I tend to have friendly interactions with their team, but I think it's just a story of focus. It's like people want to, the idea of all-in-one is like appealing to people. They're like, yeah, less tools. Great. But for something like SMS, where it's going to be a huge line item, it's going to have a lot of cost and it's going to produce a lot of revenue. If there's a tool that can deliver actual alpha, that can like actually deliver like incremental subscribers or incremental revenue per message or incremental features that deliver incremental revenue per message, the scale of the spend and the scale of the revenue is going to be worth it. And that only comes from focus. Like when you become a really, really big company and your primary product is one thing, in this case, it's email, then you're probably going to be the follower in the more niche category where people are really aggressively innovating in. Like we've been at this 7 years and still all we do every day is wake up and try to innovate in SMS and like try to find alpha. And like the founders are super involved in like chasing that. And I think that creates a ton of like advantage and momentum. Like I think that it's like the story of focus, and like focus being applied on a single topic over a long period of time just creates an advantage.
Yeah, man. And Jason, feel free to jump in on anything. I'm going to keep peppering Alex with questions.
I know you seriously did your prep, Sean. I'm loving this. I'm just going to, you're going to do the play-by-play and I'll jump in with color commentary when I feel appropriate.
Oh, dude, I'm a world-class interviewer. You brought up the line item, right? I think it's really actually an interesting point that it's very hard for a company to launch a second product that would be more expensive, right? So I give Klaviyo $50K a quarter, and it's not uncommon for me to have a $50,000 Postscript bill, right? And that's because of the fees associated with SMS. So one, why is SMS so expensive? And then two, we'll talk about like that actually like being this big opportunity for you, right? Like because I think that's why Klaviyo couldn't get into it. They're like, oh, SMS, nobody's going to want to send those because they're so expensive. But as you found, the open rates are way higher. So why is it so expensive? Who's getting the money there?
So it's a crazy ecosystem. It's a wild ecosystem. So first of all, a huge percentage of the money, huge percentage of the dollars go directly to the telephone carriers, Verizon, T-Mobile, AT&T, players like that. And that's the carrier fees. And those aren't negotiable. They don't negotiate with anyone. They don't negotiate with us on it. They're focused on selling all three of us $100 a month cell phone plans. They're not focused on like their business to consumer, messaging business in a big way. So it's a revenue line item for them. They don't negotiate with anyone, and those are just fixed. Then the other message costs, there's a huge system. There's a huge supply chain that goes into them. And, the messages go from Postscript to an aggregator, to another aggregator, to someone else who routes the messages into T-Mobile. And everyone's taking a little chunk. And that's because the whole economics are built on a per message basis, and because it's very, very difficult to cut people out of that supply chain. I can't go to, T-Mobile and be like, hey, let me just integrate directly with you. They don't do that. They don't want to do that. They haven't allowed new integrators in, decades. They integrate with two parties or whatever. And they just want all the traffic to flow through them. So it's this very static, complex, long supply chain, and the costs add up. And so for someone like us, we're actually we're a SaaS business. We're a really low margin SaaS business. And the reason is because some of that money is flowing right through to the carrier. And then the rest of it is being cut up amongst our supply chain. And so the dollar volume on SMS can be good, but the actual margins are pretty bad.
I guess my question is it a cartel? Do they don't negotiate? Do they fix the prices? It's weird. Is it cheaper to send on T-Mobile than Verizon, or is it just fucking arbitrary?
I'd have to look. It's a little arbitrary. I don't remember they change over time. No, it's not a cartel, but it's just like they have the access.
It's got to
right?
be like the airlines, though. It's just got to be like the air. You notice how all the pricing is the same with the airline. They know how to do it. It's not illegal to look at someone's price and change your price. It's illegal to discuss it with them and make a decision together, right?
Yeah, and it totally makes sense to like, look, I mean, I think Verizon bills $100 billion a year or something. Like it's like one of the largest companies on earth, super fucking profitable. And they do that because they have 50 million people giving them $100 a month, right? Like that is the real business. Why is it free to message other people, but if a business does it, we get charged? What's up with that? If I text message Jason, it's free. What's up with that?
Yeah, because they're putting a surcharge on business messaging. That's just the strategic choice that's been made on their part.
It's called capitalism, Sean.
It sounds like an oligarchy because there's three choices. Is what it sounds like.
Yeah.
And then, so this is a very, I think America-centric topic, right? Because people in Europe don't really text each other. What is the future of SMS in a place like Europe? Like what are you going to be doing for messaging in APAC or whatever?
Yeah. So messaging is actually about to go through a bunch of exciting, nerdy change. There's something called RCS coming. You know how when we all text each other on iPhones, it's blue. It's not green, and it shows up as there's like data attached to it. We can like emoji it, things like that. SMS goes through the cell towers, it's really old tech. Today, iMessage or WhatsApp or things like that are data messages, and something called RCS is getting rolled out. And what RCS is like a data protocol that will allow brands to send messages that are like interactive and have all kinds of like cool functionality. It'll be branded. There'll be native video. It'll allow carousels and read receipts. So the whole channel is getting an upgrade. And with that, deliverability should improve internationally and prices should improve as well. So like, I think a couple of years from now, Ridge and Hexclad, they'll be sending tons of RCS messages all around the globe. And that'll be like a better, more modern experience. That's what's coming.
Dude, right place, right time, right? Like you made it 7 years, and I think this is going to be another like explosion event. Like 2019 was an explosion event. People jumping on there. Yeah, we work with a bunch of tech YouTubers. They've been talking about RCS coming for like a year. They're super excited because if you ever try to text someone a photo and it's an Android phone from your Apple phone, the quality is just dog shit, and RCS is supposed to fix that. So,
one little known fact about SMS is actually it started in like it came to Europe long before. I remember in like the early 2000s, the guys pitching me on wanting to invest in SMS infrastructure businesses back when people were like investing in telecom businesses. And they were actually way ahead of us on it. And we were like, what is this texting thing? Like, this is dumb, and you had to like literally press the keys on the phone. It was so dumb. Sean probably doesn't remember that. He wasn't alive yet. Or he was like 3, but it all started in Europe. Alex, let me ask you this. So you got 300 employees now, right? Mm-hmm. We have about a third of that in terms of like daily operating people. And then we have like 100 sales reps plus like who work on our roadshow business. So that's like a different animal to manage. But how do you guys run your business from a comms perspective? And more importantly, like, where are you on stuff like project management? Because we have implemented at Hexclad PMO, and we use, I'm not going to give anyone a free plug, but we use one of those softwares that tracks and manages all that stuff. And I think like PMO makes a lot of sense for tech companies and companies that have lots of projects. But I'm constantly thinking about like, how do we run our business better? How do we avoid bottlenecks? And you guys have 300 people. Like that's a lot. How do you think about that stuff? Tell me how to manage our business better.
So for us, it's been an evolution. With each stage, probably in particular of headcount, complexity has gone up quite a bit, and we've had to like learn new skills for how to manage. So for us, right, it started and we would just have like super elemental, basic, quarterly revenue goal that everyone was working towards. And over time, we've never rolled out anything like QORs or not. What's the Google framework? I'm blanking. We haven't
KPIs.
Yeah. There we go. We haven't rolled those out, but we've set up a structure that we found that works for us. So we run on a quarterly cadence, and we do something called QORs, which are quarterly operating reviews. And these are the first couple weeks of a quarter. We do a long form written deep dive into the performance of a business unit or a department from the prior quarter. And so it like goes out async. It's like 10 to 15 pages long. A bunch of people review it, and then we'll have a live meeting to discuss it. That's how we like keep an eye on like department or team performance. Then from there, we have all these artifacts that essentially like roll up that we track performance against. We have 3 strategic priorities per year. We have 3 operational priorities per year. And those things, in addition to our like revenue goals by product line, are like what run the business. We do like monthly reviews of each strategic and operational priority. We have a designated owner for each of those things. And in general, our culture is really like asynchronous. So pretty much every type of project or priority I'm talking about, there's a written update that goes out before a meeting, normally several days before. People can consume it, and then like the stakeholders will show up and
Great. Can I double click on that? And this is something that I'm sure that Sean's business does well because they're remote. Like this whole like asynchronous business management, asynchronous operation it's something that I personally struggle with because I didn't grow up that way. Right. You guys sort of grew up doing it. I was a lawyer at Skadden. I was a junior associate. I reported to a mid-level associate, and he had a senior associate, and then there was a partner. And, sometimes I got invited to the meetings with the partner. Sometimes if we were really leanly staffed, I worked directly with the partner. I had a paralegal. I had a secretary, there was a fax room there. Like we was in faxes. We did like document distributions by we had cars driving around New York City, black cars, so I'm a dinosaur in that way. Right. But when I moved into investment banking, I worked for a boutique investment banking. I was the one who said, we need Slack. Like Slack is really going to help us. And I pushed everyone to use Slack, and it was great. When we were small, we were 15 people. Most investment banks, they don't use Slack. They won't even, it's like, no way from a compliance perspective, you can't do it. But now like Slack is everywhere. And I feel like we've gotten so big that I literally can't keep up with Slack anymore. And I feel like when you're a smaller team or a junior person and you only have to communicate with like a handful of people most of your day, that Slack is great. But you as a CEO or whatever, a co-founder, like how are you managing your day-to-day comms, especially given how async you are? And the reason why, contrast that to us, where we have a lot of remote people, like our growth team is remote, and we've got a couple of C-level execs who are on the East Coast, but a lot of us are in the HQ in LA at least half the time. And I find it really effective. Like, Niles, my COO, was in the office next to me. And it's like, he comes into my office, we talk 10 minutes, decisions get made, and we get shit done. Like, I call it GSD DNA. Like, we need to have GSD DNA all the time. And sometimes I get upset when people are like, oh, we need a process for this and we need a process for that. And it's like, they're probably right in a lot of ways. Like, you definitely need processes, but sometimes like you spend more time thinking about the process than just GSD. Right. So, but like, how do you do it? And I know we talked about this with Sean too, but I'd love to hear, because this is just, again, it's like a recurring problem for me that I'm trying to get better. And I love this pod and I love the group chats that we're in, because like I learn how to be better. That's the reason why I do this is not because I like that people know my name. Like, I really don't care. I just want to go play golf and run Hexclad. But how do you do it?
Well, Jason, that swing is looking better and better. So, keep up your Sunday swings. How do we do it? There's just a bunch of habits that we've gotten into that have worked for our culture. So it's common for teams to do like written update meetings. I'll give you an example. Our weekly exec meeting, it's on Monday mornings. The team beforehand fills out a written update of like wins, challenges, blockers, priorities, asks. We show up to the meeting. Everyone's done that. We take the first 15 minutes to like just read and consume everyone else's. And then we pull discussion topics out of that. That's a sort of model that like a bunch of the rest of the company uses. We use common devices like one-on-ones, right? My direct reports, even though we're remote, I'm on the phone, not even, hey, let's set a Zoom meeting for later today. I'm picking up the phone and calling my key people, and they're calling me live all the time. Because to your point, like, we view an advantage of Postscript as having a really fast cycle time. Sean was like, how have you guys like moved faster than other players? I think a lot of it's because we aren't like waiting for next week's meeting to get into a topic. We're like aggressively trying to push through things right away, and we'll go live or synchronous all the time. And I think it's a tricky question, but I think that's how it breaks down for me communication wise, is like, we have systems and norms like the monthly all hands, like the weekly exec team meeting that keep information flowing. Then we have broadcast messages that we put out, like, I'll write a big note to the company on like a random Friday, like filling them in on things I'm talking about. Or if it's not urgent, I'll drop someone a voice memo for later. And the other thing we do to help keep people on the same page that I'm actually super proud of, we do absolutely crazy quarterly kickoffs. When we do a quarterly kickoff, it is a produced affair. Like, the creative team is deeply involved. We go so hard. There's like skits and games and metaphors, and everyone really, really brings the energy as a way to just like kick off the next quarter and get everyone back on the same page.
Are the quarterly kickoffs in person?
They're not. We do offsites. We do a couple offsites a year, but no, they're remote. They're virtual, but the production value is like a 12 out of 10. It's crazy. We'll like bring in guest speakers. We'll have themes. There's so much energy behind it, but also a ton of substance. It's really fun.
Is your customer service team drowning in support tickets? That was us before switching to Rich Panel. What if your team could focus on conversations that truly needed a human touch? Well, Rich Panel is an AI-first help desk built for e-commerce. We've been with them for a while, and we've accomplished 3 things already. 1, we've immediately cut our customer service costs by 50%. That's more features, better support, and instant impact on our top and bottom line. Boom! Savings. The automations didn't compromise customer satisfaction. In fact, we're at an all-time high with a 92% customer satisfaction score. Our customers are happier, our agents are happier, and I'm happier because of the savings. I'm on track to save over $500,000 in CX hiring costs thanks to their AI. Now I can tell Connor to take that money and put it right into Meta. Join the 2,000 7, 8, and 9-figure brands that have switched to Rich Panel. Save money, save time, and improve the quality of your customer support. The Rich Panel team's amazing. They're going to be on Slack with you. They're there to help build custom features to make your life easier. If you want to slash your customer support expenses by 30% and reduce tickets by 30%, go to richpanel.com/demo. richpanel.com/demo. Demo. For the final time, it's richpanel.com/demo. Tell them the operator sent you. Tell them you've never heard of Cody or Jones Road Beauty, that they did not send you. It was the operators. Thank you so much. Goodbye.
You said one thing that really resonates with me, probably because I believe in it. It's like you said, people like pick up the phone and call you, right? Like, so when I think of asynchronous, I think about like all kinds of like electronic communication with people in different offices and Slacks and, and whatever project management software. And, you're being tagged in this document. Like I heard the other day, some very senior at TechSlide be like, someone just tagged me in some document and expects me like that I know that, and it gave them an answer. I've got a million things coming at me, right? Like that's just not right. And I totally get that. And so Connor Rowland and I were just talking about this the other day. I'm like, dude, we need to talk more. Like we just need to talk more because, you have too much going on. I have too much going on. You're too important to the organization. I'm too important to the organization. And so like a weekly meeting and a bunch of texts and Slacks are not enough. And you know what we need to do? We need to talk on the phone for 10 minutes, like every other day. Or even every day. And I do that with a lot of people like Jeff Faber, our CIO. He's in LA half the time and he's in New Jersey half the time. On my way from my garage to the HexCloud office, which is literally 5 minutes, I call him. Like almost 3-4 times a week. I just call him. And I think I'm just glad that you said that because like personally, like it validates to me, like there still is nothing better than having a conversation. I really think that you and your direct reports like need to talk on the phone. And the other thing is about getting answers and bottlenecks. What do you think, Alex? What do you think people should do? Like they need an answer to move forward with a project or with a task, and they're not getting the answer, right? They slacked you. They slacked the person. They didn't get an answer, right? They sent an email. They didn't get. Like, what do you do? How do you get the answer?
Yeah, I mean, in my book, you pick up the phone. A pet peeve of mine is setting a 30-minute meeting for something that's like quick and transactional, or like doing it for next week. You immediately pick up the phone, or if it's your style, do like a Slack huddle. Mike Manheimer, who's our chief customer officer, has been on the team a really long time. You two may have crossed paths with him. We talk every single day. Mike calls me as he's wrapping his day pretty much every single day. And that's like how so much of the business moves forward.
Sean, how often do you and Connor talk on the phone?
An hour every day, 7 days a week. So yeah. I mean, I think like to put like a line in the sand, as companies get bigger, yes, you're not going to be involved with everything. You can't be in every meeting. And if there's too much information rolling up to you, that's an org structure problem. You have to hire somebody to do more of those things, right? Or do less things. That's like what we're dealing with at Ridge right now is that like, probably for 6 months, we've been redlining how much stuff we can get done, right? We are shooting too much content. We are doing too many releases and everyone just feels exhausted. And then when you do that, errors just happen, right? Like we just did a drop with Blade HQ. So Blade HQ is a thing called Desert Warrior. It's like very famous in the EDC community. And we were supposed to go live the same day with our products. And, we gave them an allocation of products to sell on their website. Nobody shipped them the products. So they had to go on pre-order. And now we had to spend 2 weeks finding the shit and shipping it to them. So just very, very small error, but it happens when you do too many things. And it is just, you either have to do less things or you have to hire more people so that you can only talk about the things you want to talk about, right? So me and Connor talk an hour every single day because we're best friends. So like a lot of it's work, a lot of it's just what's happening in the world or whatever. And dude, it's probably more than an hour. I probably spend like the average hour spoken to Connor on the phone is probably 2 hours a day. Like that's probably what it actually comes down to. And then my expectation is if I Slack about something, I get an answer and I get an answer within an hour, right? So we are just a Slack forward organization. I'm never going to call my COO. I don't even have his fucking phone number, right? It is just like, no, I'm Slacking you and you're going to get back to me.
Interesting. So you said that things have been like, the like plate has gotten too big. Are you guys pulling back a little bit in terms of like number of projects or launches, or instead you trying to hire and like lean into it? What's going to happen?
Yeah, dude, it's a great question. Yeah. What's happening at Ridge right now?
we have launched probably 2 to 3 products per week for 6 months, and the team is just feeling it, and we're making those errors. And I do think strategically you start losing incrementality on those launches, right? Like, can we really do the best work if like on Tuesday and on Friday we're launching something? We probably should just do every other week or batch some of those launches together. So we're trying to do less. And then I don't want to hire more people to it. Like, I don't know what the economy looks like in 3 months or whatever. And dude, I shot and edited a YouTube video entirely myself using AI. Like, I made graphics myself. I did the editing myself, like the whole fucking thing. And I'm like, I do just think I probably need less full-time hires. So I don't want to hire more people to do it. So we're going to try to do less and hopefully get the same revenue.
So let's talk about hiring more people. Okay, because there's always the desire among teams and people, like, well, we need more people. We want to do more, so we need to hire more people, right? And I think that's just kind of like par for the course for people at our levels, that we're constantly fighting with other people to tell them no, like they can't hire people, right? But like,
Sure.
what is that like right now at Postscript? Because we added 100 people last year. Okay,
It's a lot of growth.
we added 100 people last year, and it seems like you've added a lot, right? And I'm like still shocked that we were able to onboard that many people. But now it's like, I've got open recs for 30 positions right now. And I'm like, that just sounds crazy to me. And that's like the culled down list. And it's like, wait a minute, we're already pretty big, so it's not like we're going to double our business again. Now, we're at like, okay, how do we grow that? How do we keep growing, but like not doubling? And hiring this many people sounds like a lot, but people make a really good case for it, right? So like,
Sure.
how do you deal with that?
We plan. We start planning for the following year in the summer. In like June, July, we're planning for the following year in terms of revenue goals and in terms of headcount. And what informs how much we hire comes from benchmarks. We look at like the SaaS benchmark reports out there, and we say, we want to be a best-in-class company in terms of like revenue per head. And so we believe that we're going to like grow this much this year. This is what we want our burn profile for the company to be, because we're a money-burning SaaS company. This is how like efficient we want to be with our dollars. And so coming out of that, we essentially have like a pool of like potential hiring. And then it's on all of us to think about like what the strategic plan is for the year, and essentially like horse trade and come up with the plan for how we're going to deploy those heads. For us, it's constantly an evaluation of, well, we want to put resources into like the growth machine, the revenue machine, but where we really want to put resources into innovation, into hiring like engineers and designers and product managers. I mean, there's an AI race going on right now. AI is going to completely disrupt the text message marketing ecosystem. And like, we aggressively are pushing on that. We want to be first. We're investing a lot of dollars there. And so that's essentially our process. We do a plan. We come up with like our benchmarks and growth figures. And from there, we have a pool of potential heads to hire. And we slowly build the plan that will, like, we believe, like, deliver the revenue outcomes we want and the strategic outcomes we want. And there's a lot of like trading, and as opportunities come up throughout the year, we'll evaluate them. We aren't purely stuck on that annual cycle, but that's where it all starts. And so we do like what we call the tops down financial plan. And then we do the bottoms up revenue team plan, where like the managers are coming with their asks, and we balance that with what like the finance team says our allocation should be.
It sounds like you're running your business really well, Alex. Seriously. As a former tech banker, I love talking to tech companies. It's actually really what I grew up doing for like 20 years. Selling a consumer product is actually way more fun. I'll be honest with you. Selling a product that people really like is the best. But you talked about, burn, right? We're a typical SaaS company, and we're burning. And I don't need you to get into the details of that, but
Sure.
but it is like, the mindset of, oh, we're a tech company and we're going to burn for a while. Like that, I get that. And I do think you need to do that. There's the rule of 40 or the rule of 50. I talk about this a lot. Yep. You obviously know it. You've heard it a million times being a SaaS company. I was like, I do think, however, in my opinion, like SaaS companies, software companies in general, they need to spend to gain share and ultimately grow into profitability. Like I remember when Amazon went public, right? And I remember when Google was public, and a lot of these companies, even when they IPO'd, like they weren't making money. And like eventually, like the floodgates opened and they started making tons of money. How do you look at that as a SaaS entrepreneur and co-founder in terms of, okay, like,
yeah.
Are you just like, well, because a lot of people are like, oh, well, we're just going to sell this thing, right? Someone's going to buy it at a multiple of revenue and we're good. And so we don't have to worry about profit. I disagree with that approach. I think you got to build a business you want to own forever, and then someone will buy it for a lot of money if you do it right.
Totally.
But how do you think about that?
We think of it very similar to how you just described it. We're not looking to exit. We think that the opportunity is just getting started. We think it's super early days. We want to build an extremely healthy, sustainable business. And so what that looks like is just every year getting better, right? Every year getting closer and closer to profitability, pulling burn down, pulling our margin and efficiency metrics up, pulling our like revenue per employee up. In general, there's a handful of like key SaaS performing benchmarks, and we want to be top quartile or top decile for all of them in terms of like annual revenue growth, rule of 40, burn profile, margin, etc. And so it's just managing as like tightly as we can to those metrics and like charting them up over time. Because to your point, Jason, if you stay unprofitable forever, no one's going to come save you, especially not in today's market, right? Like you have to build an enduring, sustainable business. And so that's definitely what we're trying to do.
So I want to double click on that one more time, and then I'm going to let Sean like finish us up here. I was in the .com era. Okay. I was a lawyer at Skadden in 2000. I was like, you had a track. You either stuck around and made partner, you went to be an in-house lawyer at some big company. Like Sean's got a bunch of lawyers that works for him, right? Or you went into investment banking. Those were the three tracks. Except in my era, you could go work for a .com company, okay? And I interviewed at Bear Stearns, and I interviewed at, who's the other one? Lehman Brothers. And I didn't get the job at either of them. And by the way, they both went bankrupt, so maybe that's the reason why they went bankrupt. But so I went to work for a .com company, and we had a bunch of VCs throwing money at us. We raised a bunch of money from some good VCs. And they were like, grow, acquire users, blah, 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 blah. And then one day, everything changed. And they were like, you got to start making money. And that's like how fickle investors are, right? And I just was like, I hope you guys are ready for that. And I hope it never happens to you, but I hope you are ready for that.
Yeah, I think we're embracing it. I think we're trying to beat them there.
So running an e-commerce business at scale isn't just about great products and marketing. It's about precision. And when you're operating at a high level, 99.9% accuracy stops being nice to have and becomes non-negotiable. That's why I'm excited to talk about our experience working with Ceres Analytics. They've given us real visibility into the numbers that matter. Things like product level COGS, supply chain costs, inventory optimization, all of our marketing metrics. That's just the start. We're estimating 2 to 5% efficiency boost across the board, improving customer retention, making our marketing dollars work harder, and ensuring we're operating smarter as we're getting bigger. These aren't just minor wins. They compound over time to make a huge difference in profitability. But what I really love, the cultural shift this brings. When teams have clarity on the data, collaboration improves. Finance, marketing, and operations aren't just working in silos anymore. They're making decisions together with the same source of truth. It's not just about insights. It's about execution. I talk about this all the time, execution. So if you're scaling your e-com brand and need that kind of accuracy and efficiency,
you need to talk to Saris Analytics. It's been a game changer for us.
How do you be a high margin SaaS company when you operate on very high, expensive rails, right? So like you want to be top decile on all of these. And this might be too inside baseball. So Alex, you can have final edit on this fucking podcast if you want, man. But like, I'm just curious, right? Like, how do you compete with Google ads or whatever?
We're never going to be as high margin as Meta probably, right? But how we compete is also by like expanding into multiple products, right? Like maybe we can build new products that have a higher margin profile than just like plain SMS.
Right. And that's what investors want to see, right? Margin expansion. So, for our listeners, wallets are super high margin, luggage, lower margin. That was dumb of me. Like if I sold those evenly, my margin would go down year over year. Rings, a higher margin product. So it's really hard when you start off best in class, but people want to see margin expansion, particularly like Wall Street. Like Yeti gets fucking dinged if their margin goes down year over year. But you brought up more products. Is the acquisition of Fondue public?
Yeah. Fondue was announced a couple of years ago. It's a nice little product that we bought. We like it a lot, but also like everything going on with AI is like meaningful new product opportunities for us, right? Like, and that's probably the more like cashback, and Fondue has been super effective. There's brands. I mean, Ridge is using it. Just became the sponsor of the new Financial Operators podcast, which we're excited about. But
sick, dude! We get a lot of Alex money, man.
It's true. It's true. Those VC dollars. But also like there's just so much potential with AI, and we think that in particular there's potential for like all our customers are cost sensitive, right? You guys know this. Like merchants are trying to cut costs, but if we can show them clearly measurable incremental revenue, that is something brands will pay for. And we think with AI, there's a ton of opportunity for it.
Yeah. So you said that. I want to circle back. What is AI going to do for SMS? Everyone talks about AI being this big disruptive thing but they talk about it in broad strokes, like someone describing a sunset or whatever. They're like, AI is coming. It's going to do whatever. All right, man, you're building it. What is it actually going to do for SMS?
Yeah. Here's a great example. There's a product we already launched called Infinity Testing. For example, your team comes in, they drop in a marketing campaign, a text campaign to go out. Our Infinity Testing product takes that campaign, creates 100 versions of it, scores it using a probabilistic model, and runs an automatic holdout test to that segment of your audience, testing the 10 top performing variants of it, and then pushing the majority of the traffic to the best performing one. Running an automated instant 10 to 100 part A/B test is not something a human can do on every single text campaign going out. That's like a great practical application of AI that's just putting like incremental dollars in the brand's pocket.
Alex, I'm going to pause there. My ask, we should easily get those learnings and then be able to do Facebook ad copy, email campaigns off of those.
Yes, I firmly agree. So here's the vision with AI that we're figuring out. It should not be a GPT wrapper. It should do three things. It needs to be deeply actually on brand, right? So we built out this thing called the Brand Center where brands can like customize their tone of voice and see examples and control it. The second thing it should do, it should drive incremental revenue proven by holdout testing, like I just said. And the third thing, it should pass all the insights and learnings back to the marketers. Because to your point, if Postscript AI is testing thousands of different abandoned cart messages, whichever one works, there's probably a reason for it. And that should inform, to your point, everything else the marketing team is doing. So like that is our approach to AI. The Infinity Testing product is out. We're about to launch a product we're super excited about next month called Shopper. Like we're super aggressively innovating here. We're bringing AI to pop-ups and list growth. And I think it's going to be a real difference maker.
Yeah, because people always say things like, "Whoa, like we're going to do it with AI," but like that's actually a really good thing where you could do 100, A through Z plus A through Z tests or whatever.
Yes.
Actually pull out the winners, and then if you could be like, "Hey, this is the email you should run. We tested your audience.
we got immediate feedback because it's SMS. Like you can't really do this off of Facebook ads, right? Because there's some sort of delay, but like immediate feedback on closing revenue and be like, now run this free email campaigns. Now here are your Facebook ad ideas that we should actually like go out there and test. So that's a really good example, man. I'm excited. Infinity testing. It's a great name too. Who named it?
The name has been trademarked. I don't know who named it, but I think it might have been my co-founder, Colin. But I'm not totally sure.
So look, we've done some nice nuggets about generally managing a business. I hope people found that useful. I personally did. A little snippet on AI, like that Sean's question right there or his ask right there. It's actually, I just love hearing it because everyone's sitting around talking about how do we use AI? What do we do about AI? Do we need a chief AI officer? Every company needs a chief AI officer. We even had like a meeting here about, how are we using AI? And someone on our creative strategy team, she was like, I'm in AI all the time. Like I'm just using ChatGPT and I'm doing this and blah, blah, blah. So it's funny. Like there are people in our organizations that like they're using they're doing all kinds of stuff with AI, right? Like my son's a media buyer and he's like, he's doing, I don't know whether it's GPT or one of the others. And like, I talked to him and he's like, oh, yeah, I use it all the time. And I'm like, that's impressive to me, but like, it's just, there's only, and there's people who are like, Freeberg said on the All In, like couple months ago, like when he's in his car, he's like literally talking to ChatGPT, right? And like learning, just like to learn stuff. It's pretty wild, but it's nice to hear Sean like point out like this would really help if we could use AI to do this. Like specific examples of AI. I think people are really hungry for specific examples of AI usage, Sean, because like any technology, it's like, how do I make it real?
Mm-hmm.
Dude, and like it is powerful, right? But it's powerful in the most nebulous way possible, right?
Yeah.
It's like the guy who's the strongest guy ever at ripping phone books. It's like, all right, well, what are you going to do with that, man? And it's like, so it's cool to be able to harness that power towards something. I wanted to talk about daily stand-ups. Okay. So I was just talking to the guys from Baseball Lifestyle, fantastic brand, super fucking crushing it. Cool. They have the same problem Jason has, where it's like they're a hybrid workforce. They have some of the executives in office. They have people all over the country. And they're like, yeah, information's just not passing around. Ridge's solution to this, I don't expect people to talk to Connor for an hour every day, right? Like that's just, it's very hard. It's hard to scale Connor hours, right? But we have a 30-minute daily stand-up where everyone has to attend, cameras on, asking questions, reporting on shit. And the more people I talk to, the less likely, like I don't know anybody else doing it. So Jason, why don't you do it? Alex, why don't you guys do it?
Daily stand-up. Look, I like the idea. I really do like the idea, but like how many people can go in a daily stand up, and then like we have we have a few key like group meetings, which I think should be more productive. Like every Wednesday we have our Wednesday meeting, which is, it used to be the all hands meeting, but then we got so big, like we can't have an all hands meeting anymore. So once a month we kind of have an all hands meeting. And then the other 3 Wednesdays, we have the senior leadership meeting. And the senior leadership meeting is, 10, 12 people. And like a third each week will like present at the meeting. And I still think that meeting is like way too much of it is just like informational as opposed to like decision making, conflict, getting answers. Like I want people to get answers. So I would love to know how I could make a daily stand-up work, and how like I find that meetings are just like become very inefficient, and all the stuff, Alex, that you're talking about, like all the prep work that you guys do, dude, that's a lot of prep work, and
it's a lot.
And like kudos to you guys for doing it, like really, because there's a lot, and that prep work is good. Like we just started doing like the growth team at Hexclad, we like the finance team was like, hey, we need a weekly recap of all this stuff. right? And you need to provide it to us. And I almost feel bad asking for it, right? Because it's like, I hate making work for people because I just feel like everyone's got a lot on their plate already.
Yeah, I found that the prep work does like raise the quality bar, but I'll say this to the daily stand-up, Sean. So right now, my instinct is that like it would, if we did a daily stand-up poster for the whole company, it would just be like so disparate that it would end up wasting some people's time. But I'll say this, my co-founder, Colin, he spends a lot of his time launching new things here, incubating new products, incubating new projects, incubating new ideas. He's done a lot of that. And whenever a new thing comes around, he does a daily stand-up. And he does it for a while with the core team. And it's just because, especially on like a slightly smaller team or like a more specific problem, I think it can build insane momentum to have like a daily point of accountability and communication to like work through problems to see if people have made progress in the next day. And that's worked really, really well.
Dude, yeah, look, I'm not an advocate for more meetings, but look, Jason, we have a marketing all hands on Monday. We have a go-to-market review on Thursdays, and that's like 70 people in each of those, or 40 people. So a lot of the company attends those meetings. Then we have on Thursday, we have like a purchase order meeting where everyone goes through what the fuck are we ordering and why, and like, what does it look like? Wednesday, I have my leadership meeting, but every single day, everyone gets together with their camera on. And I was going to talk about headcount next. We peaked at like 80 people. We're down to like 63. Okay. So I've made cuts to US headcount while revenue's gone up. And that's because I think the future of a company like Ridge is more like 30 people and less like 80 people. Right. Sure. I think I could do, fucking $10 million per person or whatever. Right. Like there's so much leverage in our business because other people are building shit with SaaS and AI and whatever else. And it used to be that like you wanted to fight about headcount because like it was like, oh man, I got so many employees. Like it's such a big business. It's totally crushing it. Those days I think are so far gone that like that pissing contest now it's like, oh man, you have 300 employees. That's too many, right? Where that's like the flip side of the argument. I think we can start doing way more with less. And what I found is the more people you cut, the more bullshit just kind of goes away. So my employees, listen, I'm not advocating for cutting fucking half of you right now. But I just don't know if we ever get to like this massive headcount growth again, where every hire is, I think, just way more strategic.
Sure. I think that's a good thing to anchor on. I don't think it's been our greatest strength.
Well, dude, fuck it. You're growing. You're the only guy here worth $1 billion. Maybe you and Jason. You're not going to listen to the little wallet guy.
Love when Sean gasses up everybody about how rich they are. Dude, Sean just bought a house in LA. Okay. Sean's rich. All right. Are you in your new house right now? You are, aren't you?
Yeah. I'm in my new spot.
That's
It's
awesome.
not done yet. In the middle of moving in.
Yeah.
Well, getting gassed up at 7:50, 8:15 in the morning I'll take it. Okay. Here is the story. This is a Postscript Ridge collab, and some pretty cool stuff has been born out of it. So, a lot of people know that SMS is a really regulated space. A lot of brands have gotten SMS lawsuits, many of them frivolous, many of them like made up. And so it's something that we've had to care about for a long time. And so we've tried to like build a lot of compliance into the product, but also we have a compliance team that's like lawyers that focus on this area to try to help our customers out when they get in trouble. And we hired a guy named David Carter. David Carter is one of the leading SMS attorneys in the world. David Carter was Postscript's attorney when it was just like 3 of us. And we like saw this guy making YouTube videos about SMS law. And we just like reached out to him cold when we were in Y Combinator. So we've known him for a long time. He recently joined the team, and he has a ton of expertise, not only in SMS, but also in like regulatory and lobbying and compliance. And so Ridge, I don't think you'll mind me saying this, Ridge got a big, crazy SMS lawsuit a couple years ago. And the plaintiff was saying that they'd sent a snail mail letter to Ridge's HQ asking to opt out. And after sending that letter, which Ridge never received, after receiving that letter, they got a whole bunch more text messages. They sued in Virginia because Virginia had rolled out a new SMS law that like opened up a loophole for these kind of claims. It was a big number that they were originally suing for. And that's crazy. It's crazy to be able to like pretend to send a letter or to send a letter to unsubscribe from an SMS list. It just opens up all this ambulance chasing. So David got together with Gina, Ridge's GC, and David came up with this idea for the EIA, the Ecom Innovation Alliance. And what it is it's a trade group specifically aimed at advocating for and defending brands and getting laws changed. And we went to Virginia together. We hired a lobbying firm. We partnered with some smart lawmakers there who don't want to hurt business. And we got the law unanimously changed. So this loophole got closed. That was super exciting. It's a huge accomplishment. Brands won't receive that kind of lawsuit again in the state of Virginia. And from that came a bunch of momentum. So Postscript decided to invest. Ridge has helped out as well. We've invested a lot of money into this organization called the EIA. We are welcoming brands, other tech firms to come in and be members. Moise was tweeting about something like this recently. And we are aggressively getting rules and laws changed, and momentum is building. We've been partnered with lawmakers in Michigan, in Illinois. We've started working with people in Oregon. We're helping them shape different privacy and SMS laws to ensure that they're fair to brands. We've filed a bunch of we filed a bunch of comments and petitions with the FCC and the FTC around everything from import tariffs to getting AI regulation rolled out in a way that's fair for brands. And it's become this really lean, mean unit that's already driving meaningful change, getting loopholes closed, passing new laws. It's been super cool to see. And what I've learned is that all these lawmakers, they actually don't want to hurt brands. They don't want to hurt business. They just haven't had a way to talk to brands before. There hasn't been a representative body. And so this thing is kind of taking off and it's working super well. And we're really proud of it.
Yeah, Alex. So I can't comment on our case because it was settled, but doesn't it seem unfair that you can get on a website and sign up for SMS via the website, and then, instead of just responding stop in a way that we could all understand that, oh yeah, you don't want these anymore, to send a letter with no tracking tied to it, no proof of delivery, and then ask for, like I'm saying, this is not my case, but just it's a theory, millions of dollars, okay, for the inconvenience of receiving a few text messages. That doesn't seem fair, right? And the problem is that there is no e-commerce lobbying group. Lobbying is like a 4-letter word to a lot of people. They're like, oh my God, what a scary, bad thing. But representatives want to, 1, protect the economy, 2, help their citizens out, right? And they try to balance those things. But if they're not hearing from the economy piece, they're only going to hear from the person who's trying to fuck over brands, okay? And then everyone has always talked about this idea that there should be an e-commerce alliance, right? You see that floated around on forums and on LinkedIn and on Twitter all the time because it's oh, I'm sick of these ADA complaints. Well, nobody was fucking doing it. So Alex ended up doing it, right? You have to put your money where your mouth is. I am fortunate enough to be able to spend $10,000 a month on this and give, my amazing lawyers time to this. I have 2 in-house attorneys and, they can spend and help with this. But we're looking for more people, right? If you don't ever want to be sued for an ADA complaint, if you don't want some random fucking SMS lawsuit threatening millions of dollars in damages to you, you have to actually go out there and change these laws. And that's what we're doing. So Alex is a friend of the pod. We use Postscript. We love it. He's also a friend to e-commerce kind everywhere, right? So this is an open invite, dude. Clavio, join up, man. You're $1 billion company. We're worth $12 billion. You can't spend 50 G's helping us not get sued. So that's my call.
We would love to have any of the tech players in the space join us on this. Absolutely.
Because, dude, it's not going to just be SMS lawsuits. It's not just going to be ADA. Wiretapping laws are coming for if you use a TikTok pixel, okay? If you use a Meta pixel, that's insane. But Meta doesn't want to defend it, right? Meta's you deal with it, right? You settle them for 10 or 20 grand a pop. And then I have a 6-figure settlement thing per year. It's fucking stupid. So,
crazy.
Alex, dude, big fan of what you're doing. I hope this episode gets massive viewership. I'm going to be plugging it. Anything else you want to say before we leave?
It's been a treat.
Now, you've been on a lot of e-commerce podcasts. You think this is the best one?
It's the best one, Sean.
All right, dude. Appreciate you.
Thanks for having me. Talk soon.
Well, you made it to the end. You are now a true friend of the operators. Some other friends of the operators: Northbeam, Fulfill, Postscript, Ceres, Rich Panel. 5 softwares, 5 sponsors, 5 softwares I actually use and pay for, and I was using and pay for before they started paying us for the podcast. Thank you for sponsoring the podcast, all 5 of you guys. Thank you for making it to the end. Thanks for being here. Talk to you later.